Tim Quast.
That's my bushwhacker dance. Remember the bushwhackers? Tim, do you remember the bushwhackers? They'd come in.
I don't.
You don't remember? You didn't watch WWF back in the day? The bushwhackers, they'd come in like this. Boom, 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 boom. They were great, man. The bushwhackers.
I don't have enough rhythm to be able to do that. So
I have no rhythm.
Fortunately, you do.
No, I have none.
Good to see you guys. It does appear that Joel has nodded off.
I know. He hasn't been talking. He's mad at me, though, Tim. That's what.
I'm sorry to hear that.
Wait.
Joel, we need you. We need you. We need
no,
the energy.
This market's so easy, Tim. It just goes up. We got a bunch of geniuses in here. What do you have for us, Tim? I want to ask you about month end.
Yeah,
you got anything? Any month end trends for me?
Well, as you know, because you guys are market structure fans, that we always pay attention to month end because there's a giant futures contract that expires on the last trading day of each month. So the CBOE, the Chicago Board of Options Exchange, created this thing in 2014 to help indexes true up their tracking. So if you're not tracking the benchmark, suppose you're running a fund that wants to outperform the S&P 500 or track it. Maybe that's better. We want to track the S&P 500. Well, if you have 2% variance, you get jettisoned from all of the marketing materials because that's a tracking error that is too great. So solution, a futures contract. So you pay Goldman Sachs. Think about Archegos Capital and what happened here. It's similar to that. You pay Goldman Sachs to help you track the measure so that you don't have to go buy little bits and pieces of 500 different things. Instead, Goldman Sachs will do that for you. And they just promise you that they will eliminate your tracking error and you pay them a fee. And this is what's happening to the tune of trillions upon trillions of dollars. And so then, we have a third of the S&P 500 reporting results this week, and everybody thinks that the market is all about how these companies are performing financially, and really the $20 trillion of assets at BlackRock, Vanguard, and State Street are all thinking about, well, am I tracking the measure? And people just miss that. So that's why we pay attention. And we'll see this developing by Wednesday. And which direction will things go? Well, that's a bigger question. Where is the market? It's very challenging. I wish I'd heard a little bit more of your conversation about it, because I'd be curious to hear what you think. Dennis, what do is the market capable of continuing to rise, or are we going to hit an inflection point?
I don't know. It's hard to let's argue with it. It just finds rotations, the rotation that keeps it up. I mean, we lose sectors, and then another rotation picks up the slack. I mean, even when we were losing the tech sector severely there, you had consumer staples picking up, and the transports have been nonstop up, like we've been talking about. The rails really leading the way there. It's hard to argue with the S&Ps when they start making new highs again, and that's what they're trying to do. So I don't know. It's been the best. It's been the most consistent place to be, really, is SPY. It's not making you 20% or 30% a week like some of these smaller stocks, but just steady wins the race. And the turtle is starting to look okay.
Well, and it's an opportunity to make a point, as I always like to do, about exchange traded funds again. So people suppose that an ETF has to track the benchmark. It's going to have to own all the things in the basket. Well, at some point, that will be a requirement. The interesting thing is, if you look at the statements of additional information for ETFs, it's a regulatory requirement. Nobody reads them, but I do. So generally, ETFs have 60 days after the end of the quarter to actually post their positions. So if the transports are doing well, I could use transports to track the S&P 500. If tech's doing well, I can use tech. I don't have to use the stuff that's not performing well. I can guarantee you BlackRock isn't putting in the basket stuff that's not performing well, except to get rid of it. And so we look at the market, everybody's all thrilled about value or this thing or that thing. Well, if that's in the basket, it's going to get attention. That doesn't necessarily help you traders. I'm sure that you want to know, well, what about Tesla ahead of results? I know you were talking about Tesla. That's probably more germane for a trader. But I think these are important things to understand so that you don't misunderstand how the market works today. So should we look at Tesla?
Yes.
Let's look at it.
Yes.
We should, and I saw that you had Avis up there too. We should look at that. I mean, the market structure will always show you what is going on, and traders go to marketstructureedge.com. You can do this with me. You can go whatever you like. Go look at it and see it in terms of market structure, because it's, to me, the most important thing. If it didn't work, I wouldn't talk about it. It does work. It will almost always tell you what is occurring. I happen to have Avis up here. This is how we look at the data. So marketstructureedge.com, you can sign up. You can, it's free. You don't have to use a credit card. This is Avis. And there are two things that we think about. Market structure sentiment, which is simply the waxing and waning of supply and demand on a 10-point scale. Above 5, things tend to do better. Below 5, they tend to do worse. And it's very simple to see. When sentiment peaks and begins to come down, stocks don't perform well. And when sentiment rises, the stock does better. The curious thing here about Avis is look at how short it is. I mean, it's crazy. I would be out because of that. If 3/4 of the trading volume is coming from borrowed stock, if demand falters at all, the stock's going down. Too much supply, not enough demand. And so you would look at it from a technical standpoint and say, well, that's a great stock. No, it's not. So if you're up in Avis, get out, because look how high short volume is over trend. It's crazy.
I overbought. The stock has doubled in a month and a half. This isn't the reinvention. This is Avis Budget. This is a rental car company.
Right.
I mean, I can't like, when I just look at the fundamentals, I look at the chart and I go, what?
Yep.
That's kind of what I look at. I kind of go, what? Isn't Uber and Lyft? But I guess this is the classic reopening trade, and people are piling in there saying, we're all renting cars because we're all going on vacation, and we all aren't going to use Uber and Lyft apparently when we go on vacation, because Avis Budget Group is marching here, and we don't have Hertz as much, as even though it's still operational.
Right.
So I don't know what it's going though. Great ticker symbol.
It is a great ticker symbol. I think these are, look, I'll come back to short volume again. Massive short squeeze, right? The first part of April. Shorted a little bit into options expirations. Huge covering. That tells me that everybody bet long on calls, and now that trade is over. But this is the cause. Those movements from long to short are crazy. I don't think it has anything to do with fundamentals. I think it is it principally, this is the Citadels and Hudson River Tradings of the world who know that there isn't enough supply and that they can fluctuate supply by going long and short. They can do it. They're exempt from the short locate rules. And this is what happened. And it's happening at an accelerated pace. It's very interesting to see that. And so active money is the last party to show up. So stock pickers now think, oh, this is awesome, but they're too late. They're too late. And so often that happens to stock pickers. Look at Tesla. Here's Tesla. And there's not a good trend in this whole group. So, you think about all the people reporting this week: Twitter, Netflix, Facebook, Google, Microsoft, Apple, AMD, they're all reporting. There's not an uptrend in the group. It's really curious. There are a couple of bottoms, AMD and Google. But if you look at Tesla, it's not that it's bad, but it's not where you would buy a stock. Here's where you buy. You buy when sentiment ticks above 5. Now there's more demand than supply. And short volume is very, very low. See here where it was very high, stock, that caused the stock to dip. Then everybody covered, boom, up goes the stock. It's a 10, ticks down. I would leave. The short volume is very good. Doesn't mean that the stock's going to go down. But generally speaking, this is just an oversimplification. 80% of the returns are going to happen on the way up to 10. They're not going to happen on the way back down to 5.
Buffer sliding.
Exactly. So if I were choosing, I would say, no, the opportunity's gone. Let's go find something else. I bought Illumina and Zoom last week, and I also sold
Zoom.
Oh, I did. So we could look at those, right? So let's add those. Let's see. Do I have that in here? I don't, but it doesn't take long. Here, let's look at these, and I'll tell you why I bought them. In fact, Let's do it this way. So this is the backtesting engine called Profiler. This will tell you whether you can get a return or not. So I'm just going to hit the the default, which is 5-5, called the 5-5 rule. Buy as it comes over 5, sell when it returns to 5. I don't tend to stay that long because that cycle, the cycle tends to be 13 days. I like about half that amount of time. So you would look at this and say, well, 8% return in 90 trading days, that's not interesting. If I bought and held it, it's 20%. Yeah, but look at this. This is what I looked at. I went, okay, what happens when it ticks over 5? Well, it went from 366 to 370. I'm okay with that. The next time, how about that? Well, it went from, here, let me go back here. So it went from 384 to 384. All right, well, that doesn't help me. How about the next one? And I'm after probabilities. 391 I'm looking at the wrong one. 409 to 429. That's what we want to look at right there. 404 to 421. That's what I want. Can I do that in 2 or 3 days? That's all I cared about. I own both of them for 2 days. That's it. And I made a nice return and I left. So that's what I look for. What happens when something rises above 5? That matters to me. And both of those, they're from a sentiment standpoint. Now, I'm not going to buy and hold them. But from a trading perspective, if I go test the data and I see that there's a probability that within 2 or 3 days it rises 5%, I'm taking that. And that's the kind of market I think that we have right now. It's a very curious market. And here's what I mean.
Curious, I like that. I've never heard that analogy for the market. Curious, I like that. Curious
well, and
market.
if you missed church yesterday, you can even get that here on Market Structure Monday.
Oh, great!
So there's a curious little theological obscure reference in the Book of Revelation in the Bible about this city called Laodicea. And the author, John, says about this city, Laodicea, that it's neither hot nor cold, and he wishes it would be one or the other. And the market is very much like that. It's neither hot nor cold. And a market that is not hot nor cold is a dangerous market. And here's how we look at it. See, here's broad market sentiment. So generally speaking, this is the only oddity here is this is the Archegos Capital blow up. And it did affect the data. But generally speaking, when the market tops, you want to take some money off of the table. When it bottoms, you put it back in. That's what I did last week, a little bit, half. But I look at this and say, is it going to go up or down? If it's a weak top, we are in trouble. This will be a serious move down for the market. I'm not saying yet that that's the case. I need a little more data. But I'm watching that, and if it's a weak top, what does that mean? Well, it means that all that institutional money hasn't come back into the market. And if everything's short and there's no money coming in, what happens to the market? It tips over. I'm not predicting that. I'm just watching that and saying, it's kind of like Laodicea. It's neither hot nor cold. So we'll see.
Got a new word for our vocabulary here.
Exactly.
I don't even know how to spell it, but it's in the chat, and I'm assuming that they've got it right. So, Tim Quast is the founder and CEO of Market Structure Edge. Joins us every Monday to. We didn't really go too deep into Tesla. Can we just maybe go back to that for 1 second?
Sure. Yeah. So if looking at Tesla, it's an 8 out of 10. And once again, traders, where do you want to buy something? You want to buy it when sentiment is rising, so you have increasing demand. Tesla
so when it goes from like a 2
falling.
to a 3, what are you looking at, Tim? When it goes from like a 1 to a 2 to a 3, when are you really striking using your indicators?
It will be one of 3 things: an uptick. So any uptick, rising off of 1,
rising off of 1
and 3. And 5-5. So here, I look at short volume. Right here at the end of March, short volume was pretty high. So am I going to buy a 1 or the uptick from 1? No. But when short volume came down and it ticked above 5, there's your spot. So see, short volume is right in line with trend, and sentiment rose over 5. There's your opportunity. Then when sentiment begins to decline, leave. So right now, rather than buying Tesla, I would be selling it. Even though short volume is very, very low. Short volume is 40%. Tesla routinely is over half of its volume is short. So that's very low. And you'd say, well, isn't that a bullish signal? No, it's not, because demand is diminishing. Now, look, it doesn't mean it can't go up further, but I would take my gains in Tesla.
All right, go ahead and smash the like button for Tim Quast, Market Structure Edge, for Market Structure Mondays. Tim, always a pleasure. Thank you,
Good to
sir.
see you.
Thanks, Tim.
Next week. All right.